Today we want to talk about property and casualty insurance, but before I give it, we start talking about it, Eric, why don't you just give a little thumbnail about what Most Insurance is for those who are watching?
Sure. Thank you for having me, Jeff. Most Insurance is a property and casualty insurance agency headquartered in Tampa, Florida. We've been in business just under 40 years. We'll be going 40 years, our 40th year here this January. We focus on property and casualty, put people's stuff, their auto, their home, their businesses. That's really the focus of our agency. We're an independent broker. We represent 40 or 50 different companies on the personal line side and actually hundreds of companies on the commercial business side of insurance.
Our goal today was to ask a few questions related to your field and hopefully help those viewers who are watching us either live here in this hangout or when we post this to our blog. And so let me sort of dive into some of the questions that you and I had sort of discussed about property and casualty and insurance in that area. And it's no secret that rates in this area have been rising. In fact, I recently experienced it on my homeowner's side. What can you tell me? What's behind these increases, and what might those who are watching experience with their rates?
Sure. Yeah, no doubt the rates are increasing here. There's a lot of things that are driving that. One, insurance companies, they're more than anything, they're also a financial institution. And one thing that's affecting a lot of insurance carriers is a low margins on their financial investments. And so to maintain profitability, they have to sometimes drive up the cost of insurance to help affect that. That's the case. Another thing that people don't really, many of your viewers might be well aware of, the globalization of money, basically, and commerce. Well, same thing happens with insurance companies. We want to only think about insurance locally, and yeah, we haven't had a major hurricane come hit the Tampa Bay market in many years. Even in Florida, we've dodged many bullets. But insurance is a spread of risk, and if you've watched the news headlines, you'll see that there's a lot of claims happening all over our country and also all over the world. We're impacted. Insurance premiums are impacted even by tsunamis that happen in other countries now, and so there is that's driving up the cost of insurance. Cat losses, those are like major losses, is what they refer to as a cat loss, have been on the rise for the last couple of years. Last year, most insurance companies, not most insurance, but most insurance companies were at what they call a trade combine ratio of over 100%. Many of them running at 112, up to 112%. That means they're paying out 112 cents on every 100 pennies 100 pennies they pull in. So they're losing money, and so that's what's driving up a lot of insurance. Here in Tampa, in the Tampa Bay market, in Florida, Central Florida area, we also have a very unique thing going on, and that is we have a lot of fraud, and we have some legitimate claims as well. But on the homeowner side that you spoke of, there's been a lot of laws and a lot of changes on sinkhole claims due to in the sinkhole language on the insurance policies. And that's because of a tremendous amount of fraud that's been happening. Last year, Citizens, the largest insurance company in Florida for homeowners, took in $25 million worth of premium coverage for the sinkhole portion of on the policy, but they paid out over $250 million worth of claims.
Wow.
It's a losing proposition when you're taking in a lot less than what you're paying out. Much of this is driven by public adjusters that are going door to door to neighborhoods. They actually go down like they're a vacuum cleaners, salespeople. Or they hit the street, and you'll have 4 or 5 of them working the street, and they look for any cracks that they might see on a building, on the house, or on the sidewalk, and say, "Hey, that's a sinkhole claim. We can get you your insurance premium, your insurance policy limits, your entire policy limits." And they've been going after it. Insurance companies and companies have been paying out a ton of money for, frankly, illegitimate claims. This is not something you've done, Jeff, and your premiums are
certainly not me, but
this has been the cause, but your increase has been caused by all these other people making these fraudulent claims. So on the homeowners, on the property side, that's really driving up the costs here locally in Florida.
So this must be sort of a good segue. This must be why Citizens is looking to take a lot of the homeowners policies they have and move them to other insurers. And also I understand that they're going to change the way that they look to get reimbursed for the costs of the claims that they pay out. Is that true? Starting in 2013, is my understanding.
Yeah, Citizens is they're constantly doing a lot of new changes. They've put out a lot of things that they're hoping to do. Some that we'll actually see happen. Some that we won't see happen, I believe. Citizens has consistently been trying to depopulate their book, and they've been doing this for years. And they use what's called takeout companies. A lot of these companies, they only insure business that Citizens gives them. They don't take on any other new policies whatsoever either. And so, and this is dangerous. A lot of the takeout companies are not financially strong, and we've exhibited over the years or felt the impact of many carriers. People that we have with Citizens, they were taken out of Citizens to another carrier. That carrier, the state said, yeah, they're a financially viable option. We're good. We're just going to give them all of our policies, and then they go insolvent, and they have those policies then have to go back into Citizens, and it's just like it's this revolving door, and it's a mess. There's also Citizens is also they're trying to do everything they can to make a penny and to save money. And so what they have done, and they have started this. This is effective right now, is they're limiting any large, high-valued homes. They dropped the max coverage they used to provide was $2 million. They've dropped that down to $1 million, and the talk is to lower that down to $750 again. So they're saying any home that they had previously insured at $1.5 million, they're going ahead and they've canceled those policies.
Wow.
What they've also done, and this one is a real concern, and if any of your viewers have a Citizens policy, this is a major problem. Citizens has started renewing all their policies and writing new policies with only a max of $100,000 liability coverage. Many people used to carry $300,000 with Citizens, but Citizens went ahead and they're renewing everybody with only $100,000 liability. This is opening up a huge issue, a huge potential loss rate, because if you have an umbrella policy, which is a very important kind of policy to have here in Florida, but anywhere, you have a requirement typically for your underlying homeowners or property coverage to carry $300,000 worth of liability coverage before they pick up. So say somebody falls at your house, maybe it's a neighbor kid, and he falls and breaks his arm, and the neighbors sue you over that. Well, you're like, hey, that's fine, I have an umbrella. I've got $1 million worth of coverage, or I have $5 million worth of coverage because of that umbrella. Well, the stipulation of the umbrella is that you have $300,000 worth of liability insurance on your underlying policy. You only have $100,000. The umbrella is still going to pick up after $300,000. So you get to pay the next $200,000 out of your pocket, and then your umbrella is going to go ahead and pick up. So huge issue. Citizens is doing a lot of things like that. That's one of the most drastic. They've also reduced coverage, your coverage B, your coverage C as well. So if you had another structure at your house, if you had a fence or a shed or an outbuilding that used to be covered under the other structures portion of the policy, they've removed that coverage, so you no longer have coverage for that. They've also limited how much personal property coverage that they insure. They've dropped it from, it used to be at 50% of your dwelling amount. So if you had a $100,000 policy, they're now providing you only $50,000 worth of, they used to provide $50,000 worth of coverage. Now they're only going to give you $25,000 worth of coverage. So constantly limiting coverages is what Citizens is doing, and that's a real concern.
So these would be some pretty nasty surprises for somebody who was not paying attention and not having their insurance reviewed on an annual basis, let's say. If they just went ahead and signed the new paperwork and didn't pay attention to what they were signing, this could be a nasty surprise for them, couldn't it? Absolutely,
absolutely. Well, and what they'll find is they'll find that where they thought they were properly protected, they weren't. And so, we try to proactively reach out to all of our customers and let them know about this change and what's going on, and hopefully the same thing's happening with your with other viewers out there.
And by the way, if you're outside of the state of Florida here, Citizens is sort of the state-run insurance agency that picks up those people in the risk pool that otherwise aren't picked up by private insurers traditionally. So if you're watching this in the UK or somewhere else in Europe and you don't know what Citizens is, it's basically resident here in Florida, although there may be other groups like this in other states that are that have significant exposure to hurricanes and other kind of climatic type events. Is that correct, Eric?
Absolutely. No. Yeah, most states, or a lot of states, have their own state-run programs. So.
Okay. One of the other items we talked about was PIP, and I guess there's a new PIP law that goes into effect in 2013. Can you explain what's going on there and how that might affect policyholders?
Sure. And let me even go back to even what's motivating that, especially, and this is again a Florida thing. PIP is what that is personally injury protection. You'll hear Florida is referred to as a no-fault state, which means everybody has to carry insurance on their own policy. So if they are injured, they're immediately getting some money for medical bills and things like that. PIP in Florida is a minimum coverage of $10,000, and so what that's saying is if you're in an accident, no matter who's at fault, if you're hurt, the first $10,000 comes out of your personal auto policy. We have had a tremendous issue. Right now, Jeff, you and I are sitting in the PIP fraud county, the highest county rate, highest rate of fraud in America, right here.
Wow.
And it's all fraud. It's there's a lot of staged accidents that are going on. They actually have there's a certain part of town, Waters to like Sheldon, Del Mabry to Benjamin, I want to say the road is. It's like a square. That's the main like box of where all this this is going on. So because of that, PIP rates, the personal injury protection rates on a personal auto policy has been going up through the roof. And so the new law is going in place, and it has a lot of different aspects, and some of it we're not going to really fully be clear about how it's all going to impact. But what the new law says is that it's putting a 14-day limit on seeking treatment after a crash. The benefits are capped at $2,500 unless a doctor, an osteopathic physician, a dentist, or a supervised physician assistant or advanced registered nurse practitioner determines there's an emergency medical condition. Chiropractors cannot make that determination. Neither can pain clinics, neurological pain clinics, things like that. So what they're trying to do is typically chiropractors. I think chiropractors do a good job. I've actually gone to one myself, but a lot of times where the PIP fraud is happening are with some chiropractors, and so they're trying to limit that exposure by saying, all right, if you're in an accident and you want to get some of your PIP, you've got to go to an emergency room, go to a doctor before you can get okayed to go see a chiropractor. So that's going to be the main difference. I don't think it's really going to solve things, honestly, but we should. You know, the state's thought is that we will see some reduction in premiums costs on the personal injury protection side.
So does this just mean that 1-800-GARY will have to become 1-800-GARY-MD, and you'll have to, see patients as an MD as opposed to a chiropractor, right?
Yeah, pretty much.
Okay.
What it's going to drive, because you probably find it difficult to go see your doctor on a whim, so it's going to drive up a lot of emergency rooms for things that probably shouldn't be spent in the emergency room.
That's a good point. So, a sort of final question for you is, if many individuals are like me and they are experiencing their rates are increasing for the reasons we just talked about, can you give them some idea of the things they might be able to do to kind of keep their costs down and to keep their budget in line with what they originally thought? What can they do to cut those costs or to keep things reasonable, if you don't mind?
Sure. One thing I highly suggest is use an independent insurance broker. A lot of people have been with their same broker, maybe it's a State Farm or an Allstate guy, for many years, and have never actually even reviewed their policies. And what we find is because as an independent agency, we have a lot of options. We can actually go through and identify if there is a better policy out there. Realize sometimes the cheapest price is not the best product. And we've definitely experienced that with some of these takeout customers who went to this company that was outside of Citizens. They went insolvent, had to move back to them. So sometimes it's not the best thing to do. Review your policy though. Make sure that your home is covered properly. A lot of people were insured higher than they should have. But just because the value of your house might have decreased due to the real estate bubble kind of breaking or bursting here locally, realize that value and replacement costs are two different things. And just because you might be able to sell your house for only $100,000 today, it still might cost $150,000 to replace your house. And insurance, a good insurance agency is going to look at replacement cost and not just look at what the value is. Because ultimately, that's what insurance is there, is to make sure that you're made whole if something happens. Okay, so but look at that. Consider your coverages. A lot of times people will take higher deductibles knowing that they're not going to make a claim unless it's a catastrophic claim. So sometimes you can raise your hurricane deductible. Most people don't have the cash flow to go up over a 2% deductible, but if you do happen to have the cash flow to go to a higher deductible, that's a very doable thing. Or your all other perils deductible. Several years ago, the standard across the country was about $500. And in Florida, that's no longer really the standard. Most people carry at least a $2,500 deductible. And again, if you have the cash to be able to withstand that kind of claim, I would suggest that you're going to see some impact. Other things you can do is, especially if you have a newer style roof, if you have a hip roof, or if you're getting your roof replaced or repaired, consider getting some of the different new wind mitigation things like straps and wraps and things like that. Those will really reduce the cost of your premium on your homeowners. If you have a hip roof, which is kind of looks like a pyramid, if you will, on all sides, if you have a roof like that, get a wind mitigation done. It costs usually about between $75 and $100 to get one done, and send that to an insurance carrier, and oftentimes you can get some major credits for having that style roof, and any extra things that you've had done to it. That's a huge thing you can do. On auto insurance, it's a misnomer to reduce coverage. People think, well, I'm going to reduce my coverage and I'm going to get a cheaper price, and in fact, insurance companies actually look at people that have lower limits as if they have a higher risk. And so something you can do on your auto insurance is actually raise your limits on your coverage if it's already if it's like in the middle. Somebody who consistently carries limits of 250,000, 500,000 limits on their auto insurance will pay less than somebody who only has 2550 limits.
That's amazing.
And so don't go reducing your coverage on your auto insurance. Other things you can do, there's some neat things out there. Progressive, I'm doing it in my own personal car. Progressive has a thing called Snapshot, and if you don't drive in heavy traffic, if your mileage is down, you don't drive late at night, and you don't put a ton of miles on your car, you can get a little thing called Snapshot. It plugs into your computer, and it watches how you drive. It's not a GPS. It's not Big Brother. And you can get up to a 30% discount on your auto insurance. You cannot get a surcharge. So even if you're an awful driver, the worst you can do is get no discount. I personally got a 30% for my first 6-month term. Progressive sent me a check back in the mail for like $150. I'm now in the process of locking in my discount for all my future terms. And right now, everything's looking good. I haven't let my wife drive my car too often, and so I've got I'm locked in right now. Looks like I'll get the full 30% for moving forward. There's some things like that you can do and get.
That's awesome. As you know, Eric, on our blog just about a week and a half ago, I posted a post on my experiences of looking at my homeowner's insurance, which was raised by 25%. And I worked with Tricia Parker in your office, and she was kind enough to look at all my auto and my homeowner's insurance. And in the end, I stayed with my current insurer, which was also actually Tricia's recommendation, which shows you how much integrity she has. And so if you're interested, you can read about that blog post. I also, sort of as a wrap-up, if somebody wants to get a hold of you or somebody in your organization, take a look at their insurance, how would they do that, Eric? How do they find your website? What's your phone number?
Yep. Our website is mostins.com. That's mostins.com. Got a ton of great resources, a lot of articles on there as well you can take a look at. There's You can just click to get a quote, or you can request a review. Or our phone number in the Tampa area is 813-347-5555. That same number works in Pinellas County as well, 727-347-5555. We also have officers in Celebration and in Dade City, and we write throughout the state. So if you're outside of the area, 877-979-4854. But all that contact information is back on the website at mostins.com.
Yeah. Well, thank you, Eric, for your time. I appreciate your being on there. If you do go to Eric's website, you will notice something, that Eric actually magically appears on the quote page, which I think is a really cool little video thing. And so, again, thanks for being on this video, and we appreciate your time, Eric, and thanks so much.
My pleasure, and any questions I can ever answer, just reach out to us.